So Jonah, welcome to the program.
Thank you for having me. I appreciate it.
Welcome on the show. Excited to hear some of these SPACs. So we'll go ahead and get right into it. I'll let Chris take over, and I'll probably jump right back in a little bit.
All right, perfect, Jonah. So we're going to dive right in to the SPAC coverage here. So up first, I want to talk a little bit about STIC, so merging with Bark, parent company of BarkBox. A lot of comparables to Chewy, which has been, a hot performing stock during the pandemic. I know you wrote a piece on the Bark deal. What's kind of the short overall bull case for this SPAC going forward?
My Substack newsletter I've been doing for probably 4 or 5 weeks now, and I've kind of morphed it into a weekly newsletter where I'll pick 2 stocks every week and I'll do a deep dive on them. And actually the first stock that I put into that newsletter, I think it was 2 weeks ago now, was STIC. So STIC will become BarkBox. I believe the merger date is, I think it's late February or early March, so we still have a couple months to go. A lot of people know Chewy. I mean, I have friends that love Chewy, but Chewy is now a $45 or $50 billion company last time I checked. They had a phenomenal year, but BarkBox to me is almost like a mini Chewy, but it's a different business model. And I do think that BarkBox will eventually morph into a Chewy in terms of offering more than just their boxes, which are typically treats and toys. But the big difference, so it's a subscription model. They have different types of boxes. They have their tough toy box, for bigger dogs that are going to be a little bit rougher and rip things apart. They have their Bark Bright, which is like their teeth cleaning system for dogs. That's another box or another subscription. But then the main one is their BarkBox subscription. And I have friends on Instagram and Snapchat. Every month when that box shows up, they post a video of them opening up that box with their dogs, and it's a big event. The dogs go crazy. And what BarkBox has done over the last few years is transition from a subscription service that just sold other people's products or put other companies' products into those boxes to now being a full-fledged manufacturer where they have all the data to help them determine which toys and which treats are the most successful based on customer feedback. And then they can manufacture those products themselves. So they have much, much higher margins than they did just a few years ago, which is kind of the big differentiator between them and Chewy. So BarkBox's gross margins are around 60%. Chewy's gross margins are somewhere in the 20s. I think it's a very interesting company and kind of fit, what I'm looking for in my growth stocks.
Awesome. I want to dive into a former SPAC and one that you hold in your portfolio. So Tattooed Chef, so symbol TTCF. This one's kind of been a mixed bag as far as people's opinions on it. Is it a fad with the plant-based stuff? Can it keep up the growth? Is it the next Beyond Meat? So I know they had an investor presentation not too long ago. Big news, those deals with Costco, Sam's, and Target, and launched e-commerce. So, was there anything in that investor presentation or maybe some 2021 catalysts that really stand out for you with Tattooed Chef?
So I used to own Beyond Meat because it was kind of the only pure play way to, invest in this new vegan / plant-based food craze. And now we have Tattooed Chef as well. And there's some other food conglomerates where you can invest in it, but it's a much smaller piece of the business. For Tattooed Chef, I mean, this is exclusively what they do. It's also leaked out recently that they're doing private labeling for both Trader Joe's and apparently Whole Foods as well. But I think you nailed it. I mean, I think the growth story going forward is a combination of e-commerce, but their big retail partnerships with Target, Walmart, Sam's Club, and a few other giants. And then obviously getting more, shelf space in the freezer sections at your big grocery stores. And for Tattooed Chef, that's going to be the ongoing struggle is getting that freezer space, which is in high demand by a lot of bigger companies.
Awesome. So another SPAC that you own in that portfolio, so CFII merging with View, which is a smart windows company. So I think people were surprised when this deal was announced just because there's not a lot, of information out there about smart windows and what the potential would be there. I'm wondering here, we talk sustainability, we talk Biden plays, is that the bull case? And then also, does less people working from offices now during the pandemic, does that kind of hurt the timing of this deal or the long-term potential?
Their product is not a retrofit product. You are not going to rip out all the windows in your building to install their smart windows. It really has to be done from the ground up, new construction, spec'd in by the architects and designers. So for this company to really win going forward and really continue growing, they'll need new construction to come back, multifamily new construction. Well, the multifamily is not really that big for them. It's mostly It's hotels, it's office buildings, it's airports, it's, universities. Those are really the markets that they need to come back.
Perfect. So then one that we hit in headlines today that I know is in your portfolio, SSPK, so merging with Weedmaps. We talked about this the day the deal was announced. What's the story with Weedmaps all about?
SSPK, like you said, which is going to be Weedmaps, that's up 15% today. So obviously, what's going on in the politics right now is looking good for these two stocks. So I like Weedmaps because the comparison that I use, it's sort of the Google/Yelp of the cannabis industry, as well as a SaaS play. So they also have a SaaS solution for cannabis retailers. So, this company should have very high gross margins. This is more of like, your traditional asset-light company, which I like. So I always talk about, I like founder-led asset-light companies, and Weedmaps certainly fits that mold.
Awesome. So then another former SPAC, MP Materials. So we had the CEO on our show to do an interview. I love the long-term story, the rare earth minerals. He talked, in the future being able to sell to companies like Tesla direct, rather than through partners right now. So what's your overall take on MP Materials going forward?
I mean, we all know that electric is here to stay, right? The electrification of the entire auto transportation industry is not going away ever. If you believe in the future of electric vehicles and drones and go on and on, I just believe this is a company that is worth owning.
One area that we haven't talked about and we can get into is we've been seeing, DraftKings and a whole bunch of different players get into sports gambling. Why do you think you like DraftKings here, and why do you think you're interested in this industry overall?
The two plays right now are cannabis and sports betting. I kind of put them in the same boat. These two industries have been around for decades. They've just been sort of underground, done illegally, not regulated in any way, obviously not taxed in any way. So rather than let the drug dealers run around and sell weed and pocket the cash and a bunch of bookies make money on sports betting, it's going to happen anyways. I just would rather see it legalized and regulated and taxed and done in a safer, more efficient manner by companies like DraftKings. Now, in retrospect, I guess I should have gone with Penn Gaming, because Penn Gaming has been the better performer this year, thanks to Barstool Sports and David Portnoy. And, Barstool Sports is a phenomenal asset, and that was just ingenious by Penn Gaming to acquire them when they did. I can only imagine what DraftKings would be trading at now if they had bought Penn Gaming and they had that Barstool asset. DraftKings would be a $100 stock right now, easily. And I think that's where DraftKings has the potential to go over the next 12 months if companies like New York come through and legalize sports betting. I think DraftKings could go to 100.
Yeah, so we brought Jonah on today to talk about SPACs, some of the ones he owns. I know we could go on, all day probably about some of those positions, but I want to get into this contest that you put on.
So originally it was going to be an annual stock picking contest like most of them are. So you pick your stocks, in the beginning of January, and then at the end of December, you have a winner and they get a prize. The problem with that is, as FinTwit continues to grow, I'm launching a couple projects which, will gain some traction and exposure as well. All the people that find out about this contest after the beginning of January wouldn't have a chance to get in, and they'd have to wait 11 and a half or 12 months to get in. And I just didn't think that made any sense. I also thought there'd be a lot more value for sponsors if we could continue to grow the number of participants more often. So I decided to change it into a quarterly contest. So when you go to the website, which is fintwitstockcontest.com, there are a lot of rules. There have to be, just to protect ourselves. So, everything is super clear, what's eligible, what's not eligible, stocks over $3, stocks over $50 million market cap, you can't pick ETFs, none of that stuff. And like I said, the performance numbers for Q1 are going to start with the closing prices today at 4 p.m. until March 31st at 4 p.m. And then on March 31st, we'll tabulate all the numbers, and then we'll have our first, second, third place winners. So I will say that the cash prizes that are on the website now are actually a little bit higher. I was able to lock down two great sponsors. So Public and TrendSpider are our two main sponsors, actually our only two sponsors. So they're both putting in $2,500. I'm putting in $1,000. And hopefully, if this contest gets even bigger or there's even more excitement and enthusiasm going into Q2 when we start fresh, then hopefully I can bring even more sponsors and create even a bigger, set of cash prizes for everybody.